Good morning, listeners. My name is Richard Rawlison. It is Thursday, the 4th of March, and I'm going to discuss this week's EIA stats. And at the end, I'm actually going to discuss a little bit about the new Platts dated Brent assessment, which may well be shelved, it seems. So let's get into this week's stats. What do we have? In the US, we had crude refinery inputs averaging about 12.3 million barrels a day. That was for the week ending 5th of March. 2.4 million barrels per day more than the previous week. Refinery capacity, something that is a big indicator of where things are moving in the market, different slates, etc. Refineries operated at 69% of their operating capacity. Gasoline production, that increased to 9 million barrels a day, and distillate fuel production increased to 3.7 million barrels per day. Crude oil imports averaged 5.7 million barrels a day. That's a decrease of 0.6 million per day. And the past 4 weeks, crude oil imports averaged around 5.6, so 11.7% less than the previous 4-week period. What else do we have? We have commercial crude inventories. That excludes the SPR, which is the Strategic Petroleum Reserve. They increased by 13.8 million barrels. So it's currently nearly 500 million. I think it's 498.4, I want to say, million barrels. That's about 6% above the 5-year average as well. Motor gasoline inventories have decreased by nearly 12 million barrels, and they're about 6% below the 5-year average. And finished gasoline and blending components both decreased last week as well. Distillate fuel, that also decreased 5.5 million barrels, and they're 4% below the 5-year average. Propane, propylene inventories, virtually unchanged last week, to be honest, but they are about 15% below the 5-year average. What else do we have? So this is week ending to the 5th of March. We had WTI crude oil price of $66.08. That's $4.53 above last week's price, $24.94 more than a year ago. We also saw the potential attack at the Saudi refinery as well, which saw the market gap up quite considerably. But it's 7% of the world's crude is crude and different blends of crude come out of that refinery. So it would have been a big thing, but nonetheless, everyone was safe. The refinery was safe as well. So if you remember a couple of years back, maybe 18 months back, it gapped up quite considerably when there was that drone strike. So that's the stats. As far as I'm looking out the window now, still no planes in the sky. There does seem to be more cars on the road. In the UK, certainly we have lockdown restrictions easing in certain places. Love to hear from other people all around the world to see how you're coping. What I'd like to discuss now is Platts, the rating agency. They have had a big U-turn this week, and markets are a bit shaken up. So I'll just give you a couple of top-level stats and facts and figures of what's happened. February the 22nd, Platts come out and said it would convert their dated Brent benchmark into a delivered Rotterdam benchmark, also incorporating US WTI. This is a major overhaul in the way this Atlantic crude basin is priced. The proposal was met aghast by the market, widespread objections, a lot of the industry just complaining that the changes were simply unworkable. And yesterday, they have come out and said, and I quote, Platts have shelved plans to convert their key dated Brent crude benchmark just 2 weeks after announcing the move. They have said it would defer the proposed changes to both dated Brent and the forward North Sea, which is commonly known as the cash BFOE markets. So the dated Brent and all related assessments, including cash BFOE, will remain unchanged on a FOB basis, end quote. As a bit of background, dated Brent is currently priced on the lowest of the 5 grades, which are Brent, Forties, Oseberg, Ekofisk and Troll, loading at the North Sea terminals in the coming months. The change wasn't going to actually happen until July 2022, but the reason why it got such uproar now is just the global implications for crude prices. There's billions and billions in bilateral deals here that's on exchanges, it's on books. To unwind this would be logistically incomprehensible. I'm sure it is possible, but a cleverer man than I would need to do it. Delivered prices to include the cost of freight, and therefore it's always going to be higher than the actual cost of crude. Again, I wrote something a while back about, on oilprice.com actually, about the dislocation between futures and physical pricing. And this move from Platts would have completely done just that. It would have had a massive disconnect. So the Brent physical and the ICE Brent futures contracts, they still represent a FOB value. So this original announcement created uproar in what we call the dated to frontline swaps contracts. It drove both Platts and ICE, the Intercontinental Exchange, to launch new instruments to allow DFL markets to even function. So it's raised substantial questions of the workability, of the volume of CIF cargoes, the arrival, these pricing mechanisms, compared to the existing market mechanism. I mean, it should be known that this existing market mechanism is already called the Brent Complex. I'm not promoting Ronseal here, but if you're in the UK, you'll know the advert. Ronseal quick drying wood stain does exactly what it says on the tin. So the Brent Complex was never going to be easy. Platts have said they are open to new suggestions from the industry. One proposal came straight in from Traffi, so Trafigura, a huge player in the market. They've suggested potentially an issuance of loading programs for WTI at the US Gulf Coast in order to maintain that FOB nature of the cash BFOE market. Under this Traffi proposal, holders of a cash BFOE contract would be entitled to receive a cargo of WTI loading at the Gulf Coast as an alternative to the North Sea grades. It got a bit of support in the market, but there's also major objections. So not much more to report as yet. As it stands, everything's as it was, but it looks like in the future, both Platts and potentially other ratings agencies out there, Argus, etc., may look to change the way this complex is formulated. So, as ever, it's an excellent time to trade. I'm going to be here to take all your questions. Feel free. Add me on LinkedIn, Richard Rawlinson. I'd be more than happy to help. And good luck with your trading. Have a great day. Thank you.